If you don't understand Dubai map, you don't understand Dubai real estate. It's as simple as that. Projects come and go. Locations don't. So let me be clear. Project names are just labels, unless you understand the micro logic behind them. You need to know how the city is planned, where the city is expanding, and where is the infrastructure moving, and which belts are designed for capital appreciation versus those built for yield. To understand where we're going, you have to understand how we got here. Dubai didn't start as a one big city. Originally, Dubai was concentrated around Dira and Bar Dubai, close to Dubai Creek Harbor and Dubai International Airport. This area was the original commercial and residential heart of the city. So Dira, Bar Dubai and Mina Rashid. This is where Dubai trading, logistics and merchant economy started. This was the foundation of Dubai as a global trading hub. Even today, this area contributes significantly to Dubai's economy, especially in trade, logistics and wholesale business. However, most of these areas are not freehold. The closest modern freehold alternative near that area is Mina Rashid, Maritime City and Dubai Creek Harbor. As Dubai grew, it didn't grow randomly. The expansion followed the infrastructure. Dubai is built around main roads and connecting roads. First, we have Maleha Road, located in Sharjah, right at the border between Sharjah and Dubai, along with Al Faya Road. From this point onwards, everything is Dubai. Now, the main roads in Dubai are the highways that move around the city and connect to major areas. We have the Sheikh Zayed Road, the spine, and then we have Al Khail Road. Then we have Sheikh Mohammed bin Zayed Road, the E311, and we've got also Emirates Road, the E611. And then there are connecting roads. These roads link communities and districts to the main highways. Ras Al Khor Road, Dubai Al Ain Road, Sukaim Street, Hessa Street, Al Yalai Street, Expo Street. This road structure explains how Dubai is planned and why the development follows infrastructure. The most important piece of infrastructure in modern Dubai is Sheikh Zayed Road. Along that road runs Dubai Metro, which reinforced this growth pattern. Before we go inland, let's quickly understand Dubai's coastline, because this is where liquidity and demand concentrates. Dubai beachfront and waterfront properties have historically carried the highest liquidity, the strongest demand, and the highest long-term value in the market. Waterfront land is limited, lifestyle demand is global, and the sea is a permanent asset, which is why beachfront locations consistently command a premium. Now let's follow Dubai coastline community by community in a straight line. Starting from the northern coastline, we begin with Dubai Islands. Dubai Islands is a large-scale waterfront district focused on tourism, hospitality, and new beachfront residential communities. Continuing further along the same coastline, you'll reach Mina Rashid and Dubai Maritime City. These communities represent Dubai's transformation of historic port and maritime zone into modern freehold waterfront neighborhoods. Moving down the coast, you'll reach Jumeirah. Jumeirah is one of Dubai's most established beachfront residential belts, dominated by low-density villas and limited supply. However, most of it is not freehold. As you follow the coastline south, you'll reach Palm Jumeirah. Palm Jumeirah is the first fully realized luxury waterfront masterplan community. This is no longer a growth story. It is a stability and liquidity story. Next along the coastline is Dubai Marina, Ammar Beachfront, and the JBR. This is Dubai's most mature and active waterfront residential cluster driven by tourism and year-round rental demand. It's important to understand that most of Dubai Marina and the JBR consist of old buildings with varying construction quality. This is why you see wide price differences. Cheaper doesn't automatically mean a good deal. New buildings tend to have higher quality and designed to hold value, appreciate better, while old stock can offer cash flow opportunities but often face rising maintenance costs that can eat up your returns. Back to the map. Here we have Blue Waters, a fully developed premium waterfront destination anchored by the Dubai Eye, with very limited supply and strong liquidity, yet the prices have already peaked. And when you continue along the same coastline, the next phase becomes clear. Palm Jebel Ali, the continuation of Dubai's waterfront strategy and represents the next long-term waterfront cycle and will be the next icon. This is why Dubai's coastline functions as a single value corridor where demand is the strongest, liquidity is the highest, and long-term value is consistently created, yet each area has its own cycle and upside potential. Now back to the land. Here we have Sheikh Zayed Road. It became the spine of modern Dubai. Along Sheikh Zayed Road, you'll find Dubai's most established urban districts: downtown, DIFC, Business Bay, Dubai Marina, JBR. These areas are central, fully built, well-connected, and directly served with the metro, which is why they show strong rental demand and high liquidity. At the heart of Sheikh Zayed Road sits downtown Dubai, anchored by Burj Khalifa and Dubai Mall. It provides the high-prestige residential and tourism backdrop that supports the corporate energy of DIFC. Right next to the downtown is DIFC, Dubai Financial District, the home to banks, hedge funds, asset managers, and family offices. This is the Wall Street of the Middle East. It is a specialized free zone with its own independent legal system. Now, DIFC is officially operating at a scale that competes with the world's most established financial capitals. It has solidified its position as top 5 global hubs for hedge funds. As of late 2025, the center has crossed the milestone of 8,000 active registered companies, making it the largest financial ecosystem in the region. Just this month, DIFC registered its 100th hedge fund, effectively doubling the number of managers in less than 2 years. We aren't seeing volume, we're seeing quality. Over 80% of these are billion-dollar club firms like Millennium and Blue Crest. Alongside these giants, DIFC is now home for over 470 wealth and asset managers and more than 1,250 family-related business entities. This connection of capital is what drives DIFC premium in real estate. It's even more expensive than the downtown and many other major prime locations. Now, when you have this many high-earning professionals and billionaire family offices in 1 square mile, the demand for ultra-luxury residential space in the downtown and DIFC corridor isn't just high, it's permanent. So together, downtown and DIFC form Dubai's economic and lifestyle core. Moving south along Sheikh Zayed Road, you'll reach Business Bay. Business Bay functions as a massive extension of downtown, combining offices, residential towers, and luxury hotels into high-density urban core. It offers a broad spectrum of price points, with value determined by 2 factors: proximity to the canal and the branded prestige of the development. Is it having a good quality or not? However, there is a reality here most people are not telling you, which is supply. As of late 2025, Business Bay has the most aggressive development pipeline in the Central District, with over 15 major residential complexes scheduled for handover in 2026 alone, and that's a very high number of units. In my humble opinion, while the area remains live, work, play powerhouse, the price variance and the volume is going to create short mid-term pressure. In 2026, we're likely to see a market mild correction in this area, and in older buildings and non-premium towers, I think, in my humble opinion, that the correction will be sharper as they compete with massive wave of new high-spec supply. If you're buying here today, you cannot just buy any unit or any project just because of the proximity to the downtown. You must focus only on top developers if you're gonna buy in that area, developers that have high quality, and whether you're buying branded residence or not, you can be protected by the canal views and the good plot location to survive the incoming supply wave. Now, shifting away from the high-rise intensity of the city center, the market transitions towards more settled, low-density residential hubs. We're talking about Emirates Living, so that has Emirates Hills, Meadows, Springs, and the Lakes. These areas remain one of the Dubai's most established golf course villa communities. While the city is facing a wave of new apartment supply in 2026, the villa segment is in completely different cycle. I often tell my clients, if you own a villa, you're sitting on a gym. And if you own a villa in Emirates Hills today, with an old prices, you're sitting on a gold mine. As of late 2025, we're seeing 5-to-1 demand-supply ratio in these established communities. Prices in the Springs have almost tripled since 2021. And the Meadows is seeing 15 to 20% year-on-year growth because there is effectively zero new land to be built in this corridor. Yet the influx of high net worth families moving to Dubai is at all-time highs. These families are looking for lifestyle, family-oriented communities that has trees, lakes, and proximity to landmarks and the city's top school, which makes the area driven by high demand from end users. Now we move into Al Khail Road, one of the most important parts of Dubai's map. If Sheikh Zayed Road is Dubai's financial and liquidity spine, Then Al Khail Road is the city's residential planning belt. This is where families, golf course communities, and mid-term investors sit. This belt represents the middle layer of Dubai. It's not beachfront and it's not ultra-core, but it's structurally critical. It anchors the city domestic demand and provides the infrastructure that holds the urban fabric together. For an investor, this is the stability play, with low entry prices where you trade high volatility of the coast for the constant, reliable growth for the residential heartland. Within this Al Khail belt, two major anchors define the strategy: Mohammed bin Rashid City and Meydan. Mohammed bin Rashid City is a massive mixed-use district located just minutes away from downtown. It represents the city midterm growth engine. Then here we have Meydan, originally built around classic race course. It has evolved into a strategic low-density residential district. What makes Meydan critical is its accessibility. You're literally less than 10 minutes away from downtown and DIFC. This area offers expansive lifestyle of villa community with green parks and lagoons. And while many people think Meydan is only for villas, the real volume is actually in the apartment segment. And over here we have Nad Al Shiba. Think of this area as the city's most prestigious villa-focused district. It is famous for its massive custom-built private homes and its incredible center location. Then we have Dubai Hill State, widely considered the masterpiece of Al Khail Belt, developed by Emaar. This is one of the most successful master planned communities in the world. It is a massive city within the city. It has literally everything: premium villas, townhouses, luxury apartments, its own mega mall, a world-class business park, and top-tier schools and hospitals. It's no longer just a project, it's an established brand. Whether you're an investor looking for high liquidity apartments, villas, or a family wanting a golf course lifestyle, this area offers incredible stability. Even with the current prices, the constant demand of end users makes Dubai Hills one of the safest places to protect and grow your capital. Right next to this, we have Eden Villas, a perfect example of what I call a boutique luxury play. Unlike massive master plans, this community focuses on controlled supply and modern luxury layouts. For an investor, Eden is a strategic choice because when supply is limited, price protection is high. And that's a fact, not a speculation. This is the perfect spot for those who want modern, family-oriented lifestyle but want to stay away from high-density community and want more exclusive private and luxury product. This belt also contains several key lifestyle communities. Let's define them by zones to make it easier. High activity zone, which has the JVC, JVT, Arjan, Motor City, and Sports City. And then premium and nature focused zones, which has Jumeirah Gulf State, Al Barari, Ghaf Woods, Tilal Al Ghaf, Arabian Ranches 1, 2, 3, and even Town Square. Together, these communities form Dubai's largest residential ecosystem, driven by families, end users, and medium-term investors. Now, looking forward to the remaining central pockets, we have Al Jaddaf, located between Old Dubai and downtown. And we also have Dubai Creek Harbor, a future high-density waterfront district near the airport. On the outer edge, we have Emirates Road Corridor, specifically DLRC, Dubai Land Residential Complex, which offers affordable housing tied to the city's outer expansion. Finally, we move to the South Growth Belt. Built around Al Maktoum International Airport, this is the long-term growth story. Here you'll have multiple residential towers from different developers. You'll also have some communities such as Pulse, Expo City, and you'll have 3 communities from Emaar. Now let's break down the 3 communities of Emaar. The first one is Dubai South. This is a ready golf course community designed for family living, and it sits right at the doorstep of the airport, the future employment hub, making it a primary choice for thousands of professionals who will soon call this district home. Next, we have Grand Polo Club Resort. This is Emaar's flagship equestrian destination, spanning over roughly 60 million square feet. It's designed as a high-end retreat where the lifestyle is built entirely around the world-class polo field, professional stables and a boutique hotel-style clubhouse. And right next door is the Heights Country Club and Wellness, the most awaited launch by Emaar for standalone villas with an expected starting price of 5.5 million. While the Polo Club is about sport and prestige, the Heights is an 81 million square foot destination dedicated entirely to health and tranquility. This is a premium low-density community with 1.3 million square meters of open space. It's designed for well-being. It's the perfect spot for families who want modern country club lifestyle, positioned directly on the E611. And then there is the Oasis by Emaar. This is Emaar's 73 billion blue and green, spanning over 100 million square feet, and it's designed with swimmable lagoons, luxury mansions, and it represents the pinnacle of the South Belt, offering a resort lifestyle that rivals the most expensive areas in the city center, but with space and privacy that only the South can provide. Investing in the South Grow Belt today is like buying into the marina or the downtown 20 years ago. You're not just buying a property, you're positioning yourself at the center of Dubai's next 20-year economic cycle. To invest well in Dubai, you must understand the map, infrastructure, and the vision. And if you understand how it grows, you'll invest in the right areas for the right objectives. If you're looking for clear and objective fundamentals based on the market insights, you're in the right place. And if you're looking to explore opportunities, look at the data I use for my own clients, click the link down below to connect with me. Thanks for watching, and I'll see you in the next video.